Okay, Tom, welcome everyone. It's Marcel here, or Flipping Markets. I don't know how you call me. So once again, welcome everyone. This will be today's backtesting session, Sunday's backtesting session. So let's just get started. I will generate a random number again, as usual. Let me just open random number generator. Okay, and for example, it's 20th of March. So from 15th of February to 15th of March, let's just generate a number. 2. The number is 2. So the first is the 15th of February. So the second, okay, we will backtest the 16th of February. Let me just switch to the 1 hour chart and let's just quickly find the 16th of February. Replay button is here. Okay, perfect. 8. Where is it? 15, 16, New York Open is exactly right here. Perfect. Philip boy. Yeah, of course. I'm Philippine Markets, you know. You can call me Philippine. Okay, guys. So here's the 16th of February. Just a question. What do we do before we start the backtesting session? What do we usually do? Not usually, sorry, what do we always do before we start the backtesting session? What's the first step to start the backtesting session?
Check news.
Check news, exactly. I will just check the news. Let's say February, 16th of February, perfect, end date, 17, apply settings. So Wednesday, it's Wednesday, perfect, 16th of February. As you can see, there will be high impact news going on at this region. And after the session will end, there will be a FOMC meeting. So we care about all of just these two news, the core retail sales and the retail sales. And these news will hit in after the session open in 30 minutes. So just keep that in mind and start the analysis. Switch back to the 4-hour chart and start the overall analysis. Okay. So what can we see on the 4-hour chart? What can we actually see on the 4-hour chart? We can see, and we already know that because we've talked about this several times, that the overall higher time frame trend at this region is extremely bearish, right? Price is following a clear trend, price is following a clear pattern, price action, creating highs, lows, lower highs, lower lows, lower highs, lower highs, lower highs, lower lows, lower highs, lower lows. So basically that's our overall higher time frame clear trend. Price is following this pattern since January in 2020. Yeah, sorry. So let's just focus on this current price action region. What can we actually see here? We can see that price has created this huge inertial movement to the downside. And I know we've talked about this region several times in the past backtesting sessions, recap videos, etc., but it's a backtesting session, so we have to talk about this. So price has created a huge initial movement here to the downside, created this range after the initial movement to the downside. As you can see, here's a range top, here's the range bottom, perfect range, built up for some upper supply areas at this region. As you can see, first price has swept the upper range with this huge initial movement to the upside, tapped into some supply region, maybe some weekly or monthly supply region at this region, tapped that supply region, and after a supply tap, it just reversed immediately downside and swept the downside range at this region, as you can see, with this movement. And the origin of this movement was this high point. This is the strong high point at this region, as you can see. So basically, let's just map the highs and lows out. This was the previous strong high. This was the previous week low because this week low couldn't break above the strong high here, as you can see. This is the new strong high because this high point could break above the previous week low. And as you can see, this is our new week low because this week low couldn't break above the previous strong high. So this is the previous strong high. There was no break of the structural high point at this region, as you can see. You could call this a break, but this isn't a break because this was just a liquidity sweep. As you can see, here's perfect liquidity line, first tap, second tap, and this movement has swept all of the liquidity from above these supplies and then from above this high point. So the overall structure is bearish. It's following a bearish pattern. And knowing the fact that price couldn't break above the last structural strong high point at this region, and price has just reacted on this strong high point. And if I zoom in, we will see that price has actually changed character on the 4-hour chart too after reacting on the strong high point. So price has changed character here to the downside, as you can see, because this was a low point, this was a high point, this is another low point, this is another high point, change of character to the downside, and bearish order flow started from this region, as you can see. So the overall 4-hour main trend and the higher time frame main trend is bearish for us. So we can all agree that the higher time frame trend is bearish. So what does this mean? That the main trend movement will be bearish, so short, and the counter trend movement will be bullish, so long. So every single short movement will be considered as main trend movement. Every single long movement will be considered as counter trend movement. So let's just continue analysis on the 4-hour chart. As I said, price couldn't break above the previous strong high point at this region. After reacting on a strong high point, we started a bearish order flow to the downside. As you can see, we had this valuable 4-hour demand zone down here. Can you just tell me that why are we using the wick in this region and why not this previous downside candle? Why are we using this wick? Anyone?
Because it's already been mitigated with the body.
Exactly, that's the only unmitigated region or demand zone left here. And sorry, John, I just can see that 4 people are in the waiting room.
Yes, I'm waiting their names in the Discord group.
Okay, perfect. So price is reacting on this valuable demand zone here, as you can see. Why is the valuable demand zone? It's a valuable demand zone because it swept liquidity here at this region, created a huge inversion movement, tapped into the supply zone. So basically, that's the whole, that's the origin of the whole bullish order flow at this region. Okay, price has changed character here to the downside and started a bearish 4-hour order flow to the downside. And this was one more confirmation for the continuation of the bearish order flow, because this is a perfect liquidity sweeping week on the 4-hour chart. As you can see, here was the first tap, here was the second tap, and this week have swept all of the liquidity from above this supply region. And after this, price has started an extreme bearish order flow to the downside, respecting supply zones over and over again, and creating demand breaks over and over again. Okay, what else can we see if I'm zooming more? What can we see on the previous 4-hour structural leg? We can see that price has created a break of structure here to the downside at this region, at the huge liquidity sweeping movement. As you can see here were equal bottoms, and these equal bottoms have been swept from this supply zone up here, as you can see. So this supply zone has caused a break of structure here to the downside, liquidity sweeping movement, and inefficient filling that movement at this region. Okay, what else can we see? We can see that price has created another supply zone at this region. This was another 4-hour supply zone, not as valuable supply zone as this one, because there's no inefficiency between this candle and this candle, as you can see. So this supply zone will be weak sooner or later. This supply zone has inefficiency. Price will fill this supply zone up and fill this supply zone up, as you can see at this region. And it has a great chance to reverse on this supply zone and continue the overall main trend movement to the downside. So the main trend is still bearish. We are still expecting short continuations to the downside. I will be aiming for short trades in this session, but I'll be gladly taking a 1-to-5 risk-reward ratio long trade too. So as you can see, price has created liquidity line at this region too. Here's the first tap, here's the second tap, liquidity line. And from this demand zone, if I just zoom in, you will see it better that from this demand zone, from this 4-hour demand zone, price has swept that liquidity to the upside and caused the last break of structure here to the upside, swept the liquidity, filled up the inefficiency, and tapped the supply. So this is the less structural, sorry, this is less previous demand zone at this region. Okay, so as I said, we always build a plan before start a session, before start even a backtesting session, before start a live trading session. So just build a higher time frame plan. I'll be aiming for shorts. The higher time frame structure is extremely bearish, so I'll be looking for main trend continuations, which is short trend continuation. The short trend and the short opportunities will be stronger than the long opportunities this day, because as you can see, price is in an extremely bearish trend. Okay, let's switch to the 15-minute chart, because that's all about the 4-hour chart. What can we actually see in the 15-minute chart? And we just extend this zone. What can we see on the 15-minute chart? We can see that prices changed character here at the bottom after reacting on demand zone. Change character here, as you can see, and started a clear bullish order flow, 15-minute bullish order flow to the upside, up to this supply zone, up to this 4-hour supply zone. Demand reactions all over the time, demand reactions all over the time, building a higher high, higher low, higher high, higher low structure, bullish structure up to this supply zone. And after tapping into this supply zone, I will just move the cursor right here. What do we need after the tap of this supply zone, after a 4-hour supply tap? I have to ask this every single time, because I want you to learn this. What are we waiting for after a 4-hour zone tap?
15-minute chart.
Exactly. We are waiting for a 15-minute change of character after a 4-hour zone tap. So a 15-minute change of character is needed. Let me just zoom in and see if there was any 15-minute change of character. Actually, there was a 15-minute change of character. Can you just point it out? Where was the 15-minute change of character? Where did the 15-minute change of character happen at this region? I want you to draw on my screen and point it out. Simon, that's not the good change of character. And also the yellow is not the good change of character. No, Ramona. I don't know who's the green. Yeah, the green is right. Nick, you're right. I have a clear order drawings. Thank you for drawing on my screen. So basically, as I told you several times earlier, exactly Nick, every single inside bar is a supply / demand zone. So as you can see, here's a clear inside bar. These candles, I don't know who's talking, but please mute yourself because that's annoying to hear to your background. So as you can see, this candle is inside of the previous candle. So this one, the closing, I mean, the opening of this candle is below than the closing of this candle, and the low of this candle is above than the opening of this candle. So basically, this is an inside bar. Every inside bar is a supply / demand zone. So price has changed character here on the 15-minute chart, as you can see with this movement. And for change of characters, wicks are perfectly enough. So change of character has happened here, as you can see. This was the origin of the change of character. This is a 15-minute supply zone that has caused a change of character, and a perfect setup has been played out, as you can see. Change of character, liquidity building up at this region, sweep of the liquidity from this movement, tap of the supply zone. We will check if there was any good 1-minute entry opportunity at this region. So after the tap of the supply zone, price has reversed immediately to the downside. Okay, what can we expect from price on the 15-minute chart? We can expect the tap of this 4-hour zone actually, and we can spot another inside bar here at this region, as you can see. So this will be another demand zone, but I believe this demand zone will be broken. Price is exactly in this region before the New York Open. As you can see, in 15 minutes, New York will open, and 15 minutes before the New York Open, price is in this inside bar demand zone. So what can we expect from the overall 15-minute chart? We can expect from the 15-minute chart that price will, I believe, break below this demand zone and continue the overall short movement down to this 4-hour demand zone. And inside of this 4-hour demand zone, we can identify demand zone down at this region and the demand zone up at this region. So I believe this demand zone will be broken sooner or later because the overall trend is still bearish. The overall higher time frame intention is still bearish. And this is just a weak demand zone because it literally caused just a sub break of structure here to the upside and the zone tap here and the liquidity sweep. So of course, for the criteria, it's a valid zone. It's a pretty valid zone. It's a pretty valid demand zone. But I believe it will be broken sooner or later because just compare the 4-hour supply zone to this demand zone. The 4-hour supply zone is much stronger than this small 4-hour demand zone, and prices reacted strongly on this 4-hour demand zone and exactly on the 50-minute candle inside of this 4-hour demand zone. So prices reacted strongly on this 4-hour demand zone. So I believe the overall trend, the overall main trend, which is bearish, will be continued after a tap of this demand zone, supply zone, and this strong reaction and change of character. So these demands, I believe, will be broken. I'll be aiming for downward demand areas, but let's just keep these zones because these are the most recent zones. Okay. All clear? Can you follow me? Am I speaking too fast?
All good.
All good. Okay, perfect. So that's all from the 15-minute chart. Let's just switch to the 5-minute chart and let's see if we can refine the zone. Actually, we can refine this zone, as you can see, clear refinement. And switch to the 1-minute chart. Okay, let's just check if there was any good entry opportunity at the 15-minute zone tap. And as you can see, this is basically a perfect textbook setup because price has tapped the 4-hour supply zone in the main trend. So our main trend, as I said several times, main trend is bearish. Price has tapped the 4-hour supply zone at this region. After a 4-hour supply tap, it created a change of character to the downside, created liquidity, swept the liquidity, tapped the 15-minute zone, created change of character on the 1-minute chart, entry opportunity, bam. This is a perfect setup at this region. But we don't really care about this region because we are creating a backtesting session. We are doing a backtesting session, and all we care about is the upcoming movements. Okay. So let's just start the overall backtesting session. We've checked the news. We know that the news will coming out at here and this region, and we know that price is inside of a 15-minute inside bar demand zone in this region, and we know that the overall high time frame trend is bearish. So let's see how price reacts on this demand zone. I will just play price forward. Okay. Seems like it's not a break. It's just a liquidity sweep or liquidity creation. Okay, price has actually created change of character on several places after a reaction on this demand zone. As you can see, change of character, change of character, change of character on several places. And the origin of the change of character was this demand zone down here. So basically, this is the origin of the whole change of character at this region. Okay, let's see how price actually is being played out. Let me just see if there was any supply reaction, because price is reacting strongly on something. There was no supply reaction. Okay, so there's the first entry opportunity. As you can see, price is reacting on this demand zone, 15-minute demand zone, created a change of character on several places, created a liquid trend line. We can call this a liquid trend line, and created a clear demand with inefficient push to the upside. So this could be our first entry opportunity, but we know that the higher time frame intention, the higher time frame trend is bearish. So this will be a counter trend trade. I'm just asking you if you will guys take this setup. Would you guys take this setup? Please feel free to use your microphones.
Yes, why not?
Yes, why
Maybe
not?
with smaller
No.
targets, but if you have all the confirmations, even if it's a counter trend.
Yeah, for confirmations, we need more liquid creation in a counter trend. But prices create a change of character on several places. Exactly, there's no liquidity creation. That's one of our main criteria for a counter trend trade, and there's no real liquidity creation at this region yet. But if price creates liquidity, this could be a perfect entry setup. So the question is, should we risk it or should we not risk it? I say risk this setup because it looks good. If there will be liquidity, we will risk it for sure. But let's just see how this plays out. Price has changed character on several places after a 15-minute zone tap. Okay, actually the tap has happened. Let's see how it plays out. Reaction. Okay, it's not too strong reaction. I believe it will hit stop loss. Okay. Okay, and it's done. It's over. As you can see, this is the power of the main trend. This is the power of the main trend. Prices tapped the 15-minute zone. That's right. Prices created a change of character in several places after the 15-minute zone tap. That's right. Prices created small liquidity line right here, but not a real liquidity at this region. This is exactly this week's homework. I gave you this homework to create homework about liquidity creation and no liquidity creation. And this is exactly the perfect setup for the homework on this week, because there was no real liquidity for this zone. The zone has been taken out, as you can see. So once again, this is the power of the main trend. The main trend will be always stronger than the counter trend. So let's see how this plays out. Actually, there was a flip zone. Okay, news hitting. Yeah, this was the news movement. The 4-hour demand zone has been not tapped yet. We have a clear supply zone here that has caused the overall flip zone. This was the origin of the flip zone. This was the origin of the inefficient movement to the downside. So I would set an order limit on this supply if there will be liquidity for this supply. Okay, there's actually liquidity for this supply. The news already hitting. This was the news movement. So there's liquidity for this supply zone, as you can see. And this setup looks pretty promising because, as you can see, prices created a change of character here to upside in several places. This was a faint change of character. I did not really check if this was a lunchtime movement. This could have been a lunchtime movement, actually, because this is lunchtime region and lunchtime ended here at this region. So this could be a lunchtime movement also. So yeah, we pay the price minus my risk reward ratio here, but another setup is forming right here. As you can see, flip zone after a change of character to the upside, change of character to the downside. From this flip zone, this supply zone has created the first inefficiency here, created the whole flip zone, created liquidity for this zone, and we are following the main movement. And prices did not tap into this 4-hour demand zone down here, as you can see. So this could be a perfect overall target point for our upcoming shorts. So let me just set an order limit on this supply zone because this looks actually really promising. Okay, on the 50% entry, we use a 50% entry, 1 to 5 short, and actually targeting this demand zone would give us 8 risk reward ratio, but let's see, the 1.5 pip stop loss covers the zone perfectly. So I will use the 1.5 pip stop loss in this case. So let's see how this trade actually plays out. More liquidity creation. Okay, We might be missed out. More liquidity creation. Okay, perfect. Let me just extend this zone. Seems like it's a liquidity sweep. Okay, no. Oh, perfect. Tag. So we are in the trade and this region. So what are we waiting for? We are waiting for a break of structure to the downside. So this break of structure to the downside. If this low point breaks, we will set our stop loss into break even. Let's see how does it plays out. Perfect. So our stop loss is in break even at this region. See, this is the power of following the main trend. Much stronger than the counter trend, as you can see. And TP hit. That was pretty fast. Okay. So this is a 1-to-11 risk-reward ratio trade, and we booked 11% profit in just 3 minutes. As you can see, 3 1-minute candles. This was a 3-minute 11% trade. Perfect. So let's continue. What can we see? Small mitigation of the 4-hour zone. So as you can see, this is a huge zone. So this small mitigation of this zone actually won't count. I will be waiting for a deeper mitigation. And actually, there's another setup waiting for us. As you can see, this week up here created another huge inefficient movement to the downside. And if there will be liquidity for this zone, so let's say if price creates liquidity for this zone, I'll be taking this zone regardless for continuations, even though price is coming from a 4-hour demand zone. But actually price isn't coming from a 4-hour demand zone because we can't. Sorry, can you just mute yourself, please? Okay, so we can't really count this as a 4-hour zone mitigation because, as I said, this was maybe a 1% mitigation of this zone, and the main trend is still bearish. And I believe there will be a deeper mitigation of a 50-minute zone down here at somewhere at this region. So let's see what's happening next. Sorry, that's too fast. Okay, there's a liquidity creation for this zone. Actually, as you can see, here's a perfect liquidity building up for this zone. So I'll be risking this setup because the main trend is still bearish. And can you just ask, can I just ask that why are we using this wick instead of the upside candle again? Why are we using the wick and not the upside candle at this region? As our supply zone?
That's the only unmitigated. Oh, sorry.
Yeah, that's the right answer. Thank you. That's the only unmitigated region left here because this week, I mean, not this week, this whole candle has been mitigated by the following candle. So the orders are resting on this zone. Okay. Let me just set a 50% entry on these two because I like to set a 50% entries on wicks. I don't know why. It works better for me. So I just see 1-to-5 risk-reward ratio short. As you can see, 1.5 pip stop loss will be easily covering the zone. Okay, perfect. So the target could be the 4-hour zone again for 1-to-10 risk-reward ratio or some deeper 50-minute demand region here. This is an inside bar. This could be our next initial target point. I'll just mark it out, switch back to the 1-minute chart. And let's see how it plays out. Okay, price is building up more liquidity, perfect liquidity. And break of structure to the downside. Okay, actually, this setup looks like my favorite setup. This looks like my favorite setup. As you can see, huge inefficient movement to the downside in main trend. Let me just draw it with arrows. So this is the movement, actually huge inefficient movement to the downside. Perfect liquidity creation for the zone. Here's a perfect liquidity creation for the zone. Break of structure to the downside. And this is how it actually looks like at this region. Let me just extend this zone. I know price is still in the 4-hour demand zone, but I said I'm expecting deeper demand mitigations. And our main trend is still bearish. Let's see how this setup plays out, even if it plays out. Okay, reversal, more liquidity creation. So basically that's perfect liquidity building up for this zone. If price sweeps this liquidity, this zone will be able to easily reverse price to the downside and maybe mitigate the deeper 50-minute demand area right here. So let's see how this plays out. Okay, no tap yet. Oh my God, tap. Okay, no stop loss yet. That was close. Okay. Okay. Let me just extend this zone and this one too. What are we waiting for inside of this zone? Chilling markets, I said it several times that the main trend is in control. Price has stepped the 4-hour zone, price is coming from a demand zone, but we are expecting a deeper demand mitigation. So we are expecting a much deeper demand mitigation. I've talked about this several times in this session. So what are we waiting for here? We are waiting for this low point to the downside to be broken. Thank you, Kaizen. We are waiting. Yeah, that will be our break-even point. If this low point breaks, we'll be setting our stop loss to break even. And actually, let me just see, because price has stayed above the supply zone several times. Let me just switch back to the 15-minute chart. Actually, the 15-minute chart looks like a 15-minute change of character to the upside. As you can see, downside movement, upside movement, downside movement. And after a 4-hour zone mitigation at this region, price exchange character here to the upside. This was the less high point of the week, and price exchange character with a wick to the upside here. But this could have been just a liquidity sweep. I'm not sure, but this seems like actually a change of character to the upside. Okay, our target point might be modified to this demand zone that has caused the change of character on the 15-minute chart. Let's just see if it's enough risk-reward ratio for us. It's 1 to 7.5 risk-reward ratio, so it's actually fine. Let's see how it works out. Okay, break-even point. Our stop loss is in break-even because prices broke below this structural low point at this region. So it's risky. We are not worried about it. Reversal. Okay. Okay, TP hit, perfect. So this was a pretty risky trade, to be honest. This was a pretty risky trade because price is coming from a 4-hour demand zone and change character on the 15-minute chart to the upside. But the setup was perfect. The setup was my perfect favorite setup, as you can see, as I just drawn you. Downside inflation movement, perfect liquidity creation in this region, break of structure to the downside, more liquidity creation, sweep of the liquidity, tap of the zone, continuation. And I dictate this setup only because the main trend is still bearish. I'm still expecting the break of this 4-hour demand zone. I'm still expecting the break of this 15-minute demand zone. I was expecting a break of this zone. I was expecting a break of this 4-hour zone, and prices mitigated the only a small percentage of this 4-hour zone. So as we talked about it several times, for a 4-hour zone mitigation, we need at least a 50% mitigation. Without a 50% mitigation, a 4-hour zone mitigation won't be enough for us. So we are expecting a 4-hour zone 50% mitigation. Let me just read the comments. Is this entry more risky after prices? Yes. Of course, it was a risky entry model, but knowing the fact that the higher time frame is still bearish, and knowing the fact that there was a perfect entry criteria built up for us, and knowing the fact that we already booked 11% minus 1% on this trade, so 10% profit overall at this session, I will be easily risking this setup. So yeah, the second setup has been played out. Let's see the supply zone that has caused the zone tap. This is our last supply zone at this region that has caused the 15-minute zone tap with inefficient push, as you can see, liquidity sweep at this region. So it seems pretty nice. It seems a pretty nice supply zone. Let's see how price reacts on this demand zone. Okay, it actually reacted on this zone and reacting on this supply zone. Okay, still reacting. Actually, this could have been a break, right? Building up liquidity trend line here at this region too. And this could have been a break. Or I don't know yet. Let's see how price reacts on this zone. Okay, it's actually a break of this zone. And this demand zone caused the overall zone break, as you can see. This 1-minute zone caused the 1-minute zone break. Would you guys risk your entry on this setup? On this demand zone? I'm just asking you because it's pretty important.
Yes, because of the flip.
Because there's liquidity. It's liquidity.
Exactly. Thank you for the answer. You can't really open a position on this demand zone because it's part of the liquidity trend line. There's a perfect liquidity trend line at this region, as you can see. So we can't really open a position on this demand zone. We are waiting for more confirmations. Okay. Let's see. Price is created not to break a structure here to the upside, just a liquidity sweep. Seems like it's a liquidity sweep, as you can see. Equal taps at this region, first tap, second tap, sweep of the taps with this movement. This was the last demand zone that has caused the sweep. Let me just mark it out. Okay, break of the zone has happened. There's liquidity building up for the supply flip because there's a supply flip, as you can see. This supply zone has caused the zone break after a liquidity flip. So actually it's lining up with our main trend. Let me just zoom out. As you can see, just look at the overall structure, creating series of lower lows and lower highs to the downside, then to this 4-hour demand region. Price is created 15-minute change of character or liquidity sweep here at this region. Our main trend is still bearish because we are following the higher time frame intentions, and we are expecting a deeper demand mitigation here. That's what you can actually see. Prices react to a demand zone on this region, as you can see. And after a demand reaction, prices react on this 1-minute supply zone and flip this supply zone to the upside and swap some liquidity here at this region and tapped into actually this small supply wick up here. So after a supply tap, this really small unvaluable supply tap at liquidity sweep, prices reversed here at this region, created a flip zone here and building up liquidity for our flip zone. Okay, this could have been a decent entry opportunity. This isn't a high probability. This could have been a decent entry opportunity. Let's see if we can set an entry limit on this zone. A full body entry at this zone will be okay, because actually if price, I just see the 50% entry. Actually, if price goes up this high, there will be a reversal and continuation of the bullish order flow rather than the continuation of the short order flow. So let's say if price reacts on this zone and respects our stop loss, it has a chance to actually continue the overall bearish order flow. But if price comes after this 50% of this candle, and let's say it breaks a little bit above this zone, then this stop loss, of course, would keep us in. But if the zone breaks with a wick, if the zone breaks with a wick, I believe there will be the continuation of the whole bullish order flow, of the 1-minute bullish order flow, because the 1-minute bullish order flow has turned into bullish at this region. Okay, so I'm just asking you again that would you guys risk this setup? Would you guys risk this setup? I'm just asking you. There was no demand tap at this region. There's liquidity creation. There's a flip zone as for liquidity sweep and supply tap at this region. You will risk it. Okay. I will risk it too, because knowing the fact that we almost booked funny risk reward at this session yet, I would easily risk this setup and follow the main trend. And on initial target point will be the downer demand area at this region, because I'm still expecting a downer demand tap. Let's see how it plays out. Okay. Tap has happened. We are in the trade and perfect reaction. Okay, this was perfect. So our stop loss is at break even at this point. The liquidity has been swapped on the upside. This was the liquidity, and this small candle actually swapped the liquidity to the upside. This was a liquidity sweeping candle and the strong reversal to the downside after the liquidity sweeping movement. So the liquidity has been swapped on the upside. We are waiting for the liquidity sweep on the downside and the top of this 50-minute demand zone. So yeah, our stop loss is on break even at this point. Okay, perfect reaction. Would you guys manage your stop loss here at this point? Or just keep it in break even? What will you do?
Break even.
Keep it in break even? Yeah, that would be the safest option. Because why am I saying this? That this is the safest option? Why am I saying this? Liquidity, exactly, chilling markets. Thank you. There's liquidity. This could be a liquidity building up for this zone up here. So we are just keeping our stop loss in break even. Let's see how this trade actually plays out. Okay, as you can see, this is a supply zone here, and price is reacting on this last recent supply zone. There's liquidity above this supply zone, as you can see. Sorry. So price is still reacting on this supply zone and the continuation on that supply zone. So this could have been a good entry opportunity too, but there was no liquidity creation for this zone. This downside zone has been tapped actually. So yeah, I would not risk this setup. Let's see how it plays out. I will still keep my stop loss in break even because there's lots of liquidity at this region, as you can see. So we are still keeping our stop loss in break even. Okay, liquidity sweep, reaction, and break even hit. And actually, this was the end of the session. Session has closed here. So we could have hard TP'd our position at this region. We could have hard TP'd at 1 to 5, but the hard 1 to 5 did not even hit yet. So yeah, this is a break even for us. Okay, let's see the overall results for this session. This was the first long entry here. No, I don't want to delete it. This was the first long entry, which has been a loss. So -1 risk reward here. Here was a +11 risk reward. Here was a +7.5 risk reward. Here was a break even, which you can count as a commission trade. So maybe -0.3. So overall, we booked 17 risk reward ratio on this session, executing 4 trades. And just take a look at this chart, guys. Just take a look at this chart. Basically, the whole session was just a ranging session. Let me just remove this drawing. All of these movements inside of this session was just range movement. As you can see, price was bouncing up and down between these lines, bouncing up and down. And even though we were trading a ranging session, we were trading a ranging price action at this region, we still booked 17 risk reward ratio. So yeah, let's see what happens after the session has ended. Let's just play price forward a little bit. Price is actually reversed to the upside. Maybe it will be, there was a higher supply tap at this region, maybe. Change of character to the downside and continuation of the bearish order flow to the downside. Okay. So this is the results for the backtesting session today. 17 risk reward ratio booked in this session. Let's see if you guys typed anything in the chat. Session is over. You will close your trade in a lot. Yes, Ramona, I will close my trade. So basically we can book this as a profit, or in a real session, in a real live trading session, I would have managed my stop loss here, be above this supply zone. So maybe this trade would have been +1 risk reward ratio for us, but it doesn't really matter. It's a break even for us. Last trade was counter trend. Actually, yeah, this was a counter trend trade because price exchange character here to the upside. So we could consider this as a counter trend trade on the lower time frames, but on the higher time frames, it was a still main trend trade because the main trend is still bearish. Let's just see how this 4-hour chart actually plays out. See, the continuation of the whole bearish trend is still being continued over and over again. So this was just a liquidity collecting movement to the upside on the 1-minute chart, and it needed to tap some higher time frame supply zone. Let me just play price back. So it needed to tap some higher time frame supply zone at this region, tap the higher time frame supply zone, and as I said, this demand zone has been broken with this movement. Okay, guys, have you got any questions about this session?
Feel free to use your microphone, guys. Ask your questions.
Yes, guys, feel free to use your microphones if you got any questions about this session or overall any question.
Hello, Marcel.
Hey, ma'am.
Yeah, I wanted to ask why you took the second trade after the counter trend trade, not that one, the one after this one, like the second trade, yeah, that one. Why did you take it at that supply zone, like after it hits the 4-hour demand?
Because as I said several times, we need a deeper, at least 50% mitigation of the demand zone. And this happened to me several times. Price just barely tapped the 4-hour zone. It just barely tapped the 4-hour zone. And after a 4-hour tap and a small percent of the 4-hour zone mitigation, it built up a perfect entry criteria setup. I didn't take that setup, and it went straight to my TP and continued the whole overall main trend. So basically,
if I don't see liquidity formed, is it advisable to take a trade like that?
Yeah, without the liquidity, this could have been risky. But there was liquidity, there was perfect liquidity built up for this zone. So basically, that's my favorite setup. As you guys may know, my favorite setup is this one. Inefficient movement on this line, liquidity building up here, liquidity building up here, breakout structure to the downside, continuation. This is my favorite setup ever.
Oh,
And
that's
this setup has
exactly.
happened here exactly as you can see. Inefficient movement, liquidity building up, breakout structure, strip out the liquidity, reaction. So that's why I took this trade, because only a small
that's-
percentage of this zone has been mitigated at this
Exactly
region.
what happened.
Sorry?
Yeah, that's exactly what happened. What you drew was exactly what happened.
Yeah. Exactly that happened. And yeah, of course, this was a risky trade. We could consider this as a risky trade because it was risky, because price was coming from a mitigated 4 hours demand zone, but price has mitigated only the small percentage of this zone, only the maybe 10% of this zone, and we need a 50% mitigation of 4 hour zone at least for a reversal, because that has happened several times. If Kianka will be here, she will say that don't trust the first step, because this happens several times. You can backtest these guys that after a 4 hour zone mitigation and small percentage 4 hour zone mitigation, price usually changes character on the 15-minute chart to the upside. But after this, price actually mitigates the deeper area of this demand zone. This happens several times. You can backtest it, guys, for yourselves.
Yeah. I'll try that.
Have you got any more questions, guys? Please feel free to use your microphone. Feel free to ask anything. John, are you here?
Yes.
Can you just talk, because I have to grab a cup of water real quick.
Yes, of course. So, guys, how's your feel today's session? Was it helpful? Did you enjoy it?
Yes, of course.
Are you ready for the upcoming week?
Oh yeah, I'm ready.
How's your challenges going, guys? If anyone is on a challenge.
I'm actually on phase 2 on 10K.
Oh, that's
on
nice.
MMF.
That's really nice.
So hopefully this week will be some trades.
You will be funded this week, bro.
Oh, hope so now.
Yeah. Of course.
Here I am.
Any questions, guys?
Come on, guys. Don't be shy. Just feel free to ask any question. You're usually asking questions, so just go ahead. Actually, guys, yeah, there's a question. Chilling markers. Do you set your stop loss at break even exactly on the price where you open the trade, or do you have a buffer there too? You could buffer. You have to buffer your stop loss and entry point in real sessions, but in backtesting sessions, I don't really buffer my stop loss and entry point because I don't know the actual spreads at this region and at this region. So yeah, I don't know the actual spread.
Also, if you want, you can add the commissions to the break even too.
Yeah, exactly. Guys, on Wednesday, there will be the next live session. And in Wednesday's live session, I'll be talking about the weak and strong structural highs and low points. I'll be talking about the substructure, because literally lots of you guys have texted me about substructure and wanted me to actually explain the substructure. So I will just create a session about the weak and high low points. I mean, sorry, I can't speak. I will create a session about the strong and weak points and the substructure. Will that be great? Will that be helpful? Because if yes, I will host it.
Sorry, can you repeat what you said? You'll be hosting what? Sorry.
Sorry?
What you just said now, you said you'll be hosting what?
I'll be hosting a session on Wednesday.
All right.
About the strong and weak structural points and the substructure.
All right.
I was looking at the criteria tracker in this backtesting session, it's all perfect trades with respect criteria and the track flow is useful. Exactly, Vinash. Exactly. Basically, I don't have to use the criteria tracker because I wrote that criteria tracker and I know all of the criteria from my head. So I'm not using that criteria tracker, but you guys, okay, let me just clarify something. If you're confused about the criteria, if you're confused about your zones, if you're confused about anything, just feel free to open the criteria tracker. It's in the resources channel. You can freely use that criteria tracker. You can use that criteria tracker to track your criteria, for example, on an entry point, for example, on a zone, if it's a valid zone, if it's not a valid zone, and you can actually compare your zones to each other's. So actually you can compare a supply zone to another supply zone, and you can decide on which supply zone would you like to enter. And please, guys, just use that criteria tracker because it's so important. It will save you from loads of unnecessary losses. Trading markets, it's important. Of course, it's important. But you can't really track these strong and weak highs. You just have to know that if you're opening on a weak high, you just have to know that if you're opening on a weak low, you just have to track it for yourself without a tracker. You have to know these facts.
Sorry, please, where do I find the criteria tracker?
In the resources channel.
I will link it to the questions channel. Give me a
Yeah,
minute.
John will link it to the question channel.
Okay, all right, thank you.
And guys, we have a good thing to announce for you. Everyone who has made their homework yet, any homework, will have a session with John. So yeah, if you've done at least one session, not session, sorry, if you've done at least one homework, you'll be in the call with John. And after this first call, we'll be choosing 10 people who has done the homework for the upcoming sessions, you know. So yeah, guys, if you got no questions, no other questions, that's it for today. You get a question, okay, let me hear. Chilling markets. That's how I'm gonna do it now. Yeah, just do your homework, guys. We are not in school. You have to do your homeworks.
Yes, guys, homework is so important and you can learn a lot from doing these homeworks.
When we wait for a 1 minute check, 50-minute demand, but the price runs below the 50-minute demand, how long? What happens if the 50-minute, while we are waiting for a check, the zone has been broken with body break? For a 50-minute zone, you need a 50-minute body break. That's all. If a zone is breaking with 1 minute candle, that won't be a break. You need a 50-minute zone break with body closure on a 50-minute chart with a 50-minute candle. So 50-minute zones, 50-minute body breaks. 1 minute zones, 1 minute body break. 4-hour zone, 4-hour body break.